Greetings everyone. Warm welcome to this video. As I started off, we are having our morning analysis for the gold market. So I want us to go through briefly. Today is Tuesday, January 2026, the 6th of January. Yes, we want to have the analysis for the day and see how things go today. So we are looking at the monthly time frame. As usual, we're looking at the top down analysis. We're looking at how the market is responding or reacting to different forces. Now our monthly time frame, as we can mark it here, we can see that generally the gold market is bullish, has started off very well. When you look at the opening of this candle, this is what we call the body candle opening. There is no wiki or there was no retracement whatsoever. The market opened and immediately started moving up. So this is the January candle, the January gold candle. If I can enlarge it, you can. Oh yes, there's a slight wiki. There's a slight wiki or a slight retracement of around how many pips? 25 and yeah, a bit. All right. So generally, we say gold is bullish. Gold is bullish. That means gold buyers are in control, and they have pushed the market all the way from 43.25 price of gold to 44.55 as we speak now, even almost 44.60. This is how the market is. But if you look at the previous candle, which is the December candle, is showing us, of course, there was bullish, was a very bullish run from the opening, a retracement, and then a very bullish run. Let's check on this. Okay, yeah, so this was a very long move. That means the market moved, but there was a retracement. After a long bullish move, sellers came and pushed the price back, and this was the closing of December. So why do we analyze the previous candle? To see the possible move. If this candle is moving for January, literally this, for those of you who look at liquidity, you can say that this wiki is the liquidity. Maybe this move would like to come and sweep through up to the top, or we can say the market is balancing this imbalance in form of a wiki to push up back to the higher prices of gold. We don't know. Let's see how the week goes. All right, so let's look at the weekly time frame. So we are able to see that last week, the week which made the new year, this week which had December and January, 2 years in one single candle. This was a very strong bearish move from the highs of the other week. Okay, candle opened very well and then moved a very strong move, reached this price and then retraced a bit. Now the new week we are in, if you can look at this week, it's a bullish week already. Yesterday market opened at 43.52. These are almost 1,000 pips already made in just 2 days of the week. This is the second day of this week. So what sentiment can we say about gold now? Can say gold is bullish this week. All right, so will it push further to balance this candle, this bearish candle, to balance this imbalance? As I say, or as it is learned, that the market moves for two reasons. Number one, hunt liquidity, okay, liquidity, sorry, yes, hunt liquidity. Number two, balance imbalances. Basically, these are the key reasons why the market move. Hunting liquidity, grabbing liquidity, or sweeping liquidity, whatever you can use, or balance imbalances. So every candle you see, mostly the market will always come and balance that imbalance. So we are looking at gold this week and see, okay, this is a bullish candle. Will it push through, balance this candle, the bearish candle for previous week, maybe push further, take out this liquidity which is lying on the top of these two candles? So basically we can call this the week high, and then we can call this the week low. Okay, can call this the week low. Yes, so this previous week low, this is the current week low, then this is these are the higher highs, or what we call the equal highs of the week, because we have 2 weeks here that have formed liquidity up here, or we can call it the buy side liquidity, or equal highs of the week. There are 2 candlesticks at the same level, so we can call this the equal highs of these 2 weeks. So there is liquidity lying here. The market can come, push through, balance this imbalance of this red candle, then hunt out, grab out this liquidity, push further, maybe to the new psychological price of 46, maybe, or anything can happen. We don't know. So this is a weekly overview. So we have 3 key candlesticks of the week. We have this bearish, then we have a new one which is bullish. So if bears come in and press back this candle down, okay, or push through this imbalance here. So let us look at the daily time frame. The daily time frame. This is a common top-down analysis, which is very important. Let me extend this here, be visible. Very important information. Hunt liquidity. All right. So we are at our daily candle. Now, this daily candle for today's Tuesday, we are looking at a slight, the market opened around this price, but the daily candle, there was a retracement down, then there is a pullback now. You can see here, the market came down to 44.30 slightly. Now there is a retrace, a pullback. So what is the indication? This is indicating sellers try to push the market down, then buyers have pushed the price back up to this particular price. This was yesterday's daily candle, which opened at this price, okay, then pushed through this liquidity. So that means the Tuesday and Friday liquidity has been grabbed by this Monday candle, Monday 5th of January, and the market came up to this level. We marked a fair value gap. Let's mark this fair value gap and see how the market is reacting to it. But of course, from the look of things, gold is still in this fair value gap. Yes. Let me change the color to, okay, then reduce this slightly. Good. So we can say gold is still in this daily fair value gap, which is a bearish fair value gap to say. So the question is, will the market break through this fair value gap? Remember, fair value gaps are also imbalances, and also they are also liquidity zones. So will the market push through, balance out this FVG, and then go through to the weak eyes or these higher zones? Okay, so let's see. But still, gold is still in the daily fair value gap, this one here. Okay, of course we have the sell side liquidity at the daily candle, which is lying here down. Okay, so because of this bullish candle, the market has showed interest of pushing up. So today we don't know, we only end from analysis. The market does the rest. There are things you may not have any control. The market always reserves its rights. Okay, so we go to the 4-hour time frame. We go to the 4-hour time frame. Try to enlarge this, get out clearly, and also try to compress this. Let's compress this, and then yeah, let me text this. This is the daily fair value gap. Daily fair value gap. Where the market is still in this fair value gap, which is a bearish fair value gap to be specific. So will the bearish liquidity be pushed, force the market to return down? Now what can we see? The previous 4 candle is showing it was a bearish candle. It is a bearish candle which came down, but the buyers pushed it back. Okay, so it looks like a hammer. Let's see. This is a daily, a 4-hour bullish opening. Try to go up, but then slight retracement. Okay, so liquidity, we have liquidity lying here. We can also still call this the 4-hour low and then the 4-hour high. Okay, so liquidity lying up here, down here. Where is the imbalance? We have this imbalance here, from here to here. This is an imbalance. The market has not balanced this. Okay, we have an order block here. Okay, so market will balance this imbalance, then come and grab this liquidity lying on the 4-hour. Which other imbalance do we have? We have another imbalance here, or liquidity here, liquidity here, liquidity here. This gap has to be filled by the market at a certain point, or a certain point at time. We have liquidity down here which has to be grabbed as well, and then also the ultimate one which is lying here. So I can call this is an area where the market will have to revisit down here at a certain point, if it will. But I have a feeling, because this gap here is a weekly opening, so the market will have in any of the days of the week. It could be Friday, it could be Thursday, Wednesday, Tuesday, whatever the case, or even next week, or even next month. The market reserves all rights. Okay. Today is Thursday. Let's just compress this to yes. So the trading zone of the day is this candle up to this candle of Wednesday, tomorrow 1 a.m. in the morning. So we want to see how the market reacts between this time of 5 a.m. in the morning. As we speak now, it is 6 a.m. in the morning, East African time. We have 5, we have 9, we have 13, we have 17, we have 21, and we have, of course, 21 will be the close of the day. So I'm observing how the market is going to react between this time up to this time of 21 p.m. in the evening, East African time. Okay, so let me mark this as the week low, just for the case of liquidity identification. Sorry, it's a week low, and this is the week high. Week high, it is also the daily high, daily low, 4-hour high, 4-hour low. It's still lying in the same category. So which are the major zones we have that are guiding us? Number 1, we have this daily fair value gap as our guiding tool. We have the weekly low liquidity, high liquidity. We have this imbalance here, which we think the market will come to balance this. Yes, this imbalance. Let me just mark it in a different color. Yes, we have this imbalance that the market has to come and balance out. Remember, balance the imbalance. This imbalance here, okay, to sweep this liquidity of the higher level. Then we also still have another imbalance. The market will also come to balance out all this, yes, all this, or even go further, all this. Still, this is also liquidity lying on the sell side, and this gap here, if I can mark it here, and then it can be my historical reference. Yeah, let me mark it here. This week opening gap, yesterday Monday, yes, this gap open here. Let me give it a, no, let's give it another color. Okay, let's give it black. Yes, this gap here, I have a feeling God will have to come back to this, balance out this gap, fill it, then maybe stretch a little bit down, grab some liquidity, or even come back to the weekly low. Okay, futuristically, we don't know when, but it will happen. Let me squeeze it back. For the case of today's trading space. All right, so finally, after that, we go to the 1 hour time frame. We compress a bit, then bring back this data here just for reference of learning. Okay, right, so we are on our 1 hour time frame. What is there on 1 hour? The 1 hour market raised, break of structure on 1 hour, a range. We have a range on 1 hour, which is showing indication of going up. We don't know how far and how big this would go up, or a reversal. No one knows, the market knows. All right, so basically the market is still in the daily fair value gap on the 4 hour, on the 1 hour. So maybe it's trying to break through to higher levels, and maybe there is a resistance due to, now there's a daily, there's a 1 hour order block here. Has it been? Yes. Let's check. God has already tapped into this daily, this hour order block. You'll be able to see it here. Yes. You see, God has tapped into this bearish 1 hour order block by a wiki and slight retracement. So the question is, will this bearish 1 hour bearish order block act as the key point of resistance to prevent gold from pushing further up, to reverse, to drop down further back to the sell side liquidity and balancing this gap? We don't know. The market reserves all rights. Let me mark it here, 1 hour OB. That is also another key zone of reference. Okay, we remain with our highs, equal highs liquidity, buy side liquidity, then sell side liquidity. The imbalance on 1 hour is here in the sell side, and then on the buy side the imbalance is here, liquidity lying here. Market to push through this zone, or push through this zone down. So we finally go to the 15-minute now to look at why we are looking at entries. Uh-huh. So we carry this over the block. 15 minutes. We are on the 15 minutes. Okay, to this. Enlarge this back and then expand a little bit. Okay. So the 1 hour order block, the daily fair value gap. This is the opening market gap. We have the week high. We have the week low. Okay. Yes. So 15 minutes is now providing us with a entry points. Entry points. All right. So 15 minutes, we are seeing a very serious range. Market has ranged. Let's mark this. Market has ranged. Let's say all the way. Mark this with the yellow color. You see, gold has been ranging on the 15 minutes. On the 15 minutes has been a range. There's a slight breakout of the range now in the 1 hour order block. So how will the market respond or react to this order block? Will it break it through? If it breaks out of this order block, then the next level could be the week high target. If it does not and it rejected here, then we're expecting a drop down. The day is just 6 a.m. in the morning. Let's see how things go. So guys, thank you so very much. I think this comes to the end of our daily analysis on this channel. I'll be doing this analysis every day just to give an insight of the market as we see how things go. So we end at the 15 minute as we look at how the market reacts. Should you trade now? If your setup is ready, if your trading plan has been achieved, if the market has reached your zone or point of interest, you are free to trade. But for now, if you're buying, I see signs of bullish, which the question is how far will this bullish candle be stronger to push through the market. All right, so I think thank you so very much. Subscribe, share, like, learn something, then we can always work together. All right, have a blessed day. Enjoy your Tuesday trading week. God bless you.